We are taking a trip down memory lane and tracking the series of unfortunate events leading to the collapse of First Republic Bank. This now clocks in as the second largest bank failure, a spot previously held by Silicon Valley Bank at the time of its collapse earlier this year. With more on the events leading up to JP Morgan Chase's takeover of First Republic after its demise, we have Yahoo Finance's Brad Smith, who will have the details on this.
Yeah.
Really, I mean, we could see this coming, but but take us through the timeline.
Yeah, exactly. So regulators, they seized First Republic Bank, marking it the third failure of a U.S. bank since March, which is the month where this story begins. First Republic began its fight for survival following the failures of Silicon Valley Bank and Signature Bank, and in its wake, panic about the stability of regional lenders cascaded across the country. Shares of First Republic nosedived 62% as it tried to weather the turmoil by borrowing from the Federal Reserve and the Federal Home Loan Bank, all while also taking in $30 billion in uninsured deposits from the 11 largest banks in the country. However, more turbulence shook the banking sector after Credit Suisse found itself in hot water, eventually leading to the Swiss bank being taken over by rival UBS in hopes to avoid more market-shaking turmoil. Fast forward to earnings season. Investors got a peek behind the curtain at the extent of the impact from the banking stresses in March. And while big banks came out fairly unscathed as JP Morgan racked in a major first quarter profit, First Republic, on the other hand, found itself in a world of pain. Shares of the bank, they sank, hitting a low after the embattled lender reported its quarterly results, revealing total deposits fell nearly 41% during the first quarter. In the coming days, the struggling lender found itself looking for aid once again from big banks, but this time to no avail. Not longer after the Fed and the FDIC's introspective reports on bank failures in March came the addition of First Republic's bank failure here. So now, with JP Morgan taking in First Republic under its wing, the bank has just become even bigger here. And even, Diane, as we think about what this means going forward from here,
right.
You were listening into one of the media calls this morning. We've been able to get a glimpse of what JP Morgan's vision is going to be like, even as they are continuing to signal to the street what their intentions are, even within this consolidation.
So they said, obviously, this is going to take some time. There were some things they can't answer right now. They said, obviously, their investor day is coming up. So there will be some more questions answered as the days ahead. They reiterated some things that we know, that they said that they were obviously, they didn't seek out this. Right. They were asked, to come to the table on this deal. So, not completely surprised there, but there was a question asked about just issues with regard to other regional banks, and do we see more stress there? Jamie Dimon said that didn't see the same issues that we've seen with SVB, with Signature Bank, et cetera. So he talked about just really shoring up. Someone talked about this, and if there are any parallels with regard to the financial crisis, 2008-09. He said this is different than that time period. Yeah,
and we've continued to kind of glean back to that at length as well. And it's fair to remember here as well that First Republic was actually a spinoff of, back then, I believe it was Merrill. And so they're kind of coming full circle here.
And think about how in terms of just the relationship with these financial institutions, Merrill folded into B of A. B of A was asked to come to the table with regard to this deal with JPM getting the majority of the assets of First Republic Bank.